For more on the economic data that we've had out of Japan, let's talk to Takuji Okubo. He's chief Japan economist at Societe Generale. He joins us now from Tokyo. So, Mr. Okubo, I want to start out with your assessment of the unemployment figures. You say that this data can't be right. How come?
Well, when you look at the details, it shows that perhaps the decline in unemployment is a little bit exaggerated. You know, in a Japan where everything is slow moving, something doesn't change by 10% in a month. So I do agree that the labor market is improving, but the drop of unemployment from 4.7 to 4.3 is a bit of exaggeration.
Okay, so what is happening in Japan? Because you have the reconstruction effort after the tsunami and earthquake fully underway. You've got the construction sector creating a lot of jobs. Is this going to keep Japan growing, keep its recovery on track? Yeah,
exactly. So, you know, there are different sectors, but the construction, for example, despite what you see on the newspaper and TVs, the actual public investment hasn't really started yet. Japan is going to spend about 15 trillion yen in public investment, but so far in April-June number we have, they have only spent just 5%. So 95% of it is coming in future.
But let's look at what kind of economic activity that this is. This is fueled by government spending, by tax hikes. How is that going to affect the rest of the economy, the Japanese consumer?
Right. For the next 12 months, as you mentioned, there will be a tax hike, but it's not going to come until actually late next year. So for the next 12 months, it's going to be all public spending, and no tax. For the 12 months horizon, we actually were relatively optimistic on the growth of Japanese economy.
This is over the next 12 months. What about the yen? The yen is still near that post-war high. The government's threatening action, but we haven't seen any more recently. How dangerous is the yen at the current level?
Right. You know what? I actually do not think exporters should complain about the strength of yen. You know, in the last 10 years, wages in Japan has actually fallen by 2%. And compared to that in U.S., wage in U.S. has risen by 30%. So in that sense, Japanese exporters should be able to live with 30% higher exchange rate.
But they're not. They're taking their manufacturing abroad. They're taking it to places like Singapore instead of Osaka. Panasonic's doing that.
Yeah, no, I agree, but it's something long-term, something which must happen. You know, like U.S. manufacturers used to make a TV, and I don't think they do anymore.
Right, okay, fair point. So what happens then with the Japanese economy? I mean, what happens what happens this year, what happens next year in terms of what you expect for GDP? What are the GDP figures going to come in at?
Right, so except for the case of another Lehman shock level financial crisis, we actually are positive on Japanese growth for the next few years. But after the few years, there will be a fiscal tightening coming in Japan, even in Japan. So, and by that time, I think there's a good chance that the Japanese JGB market could be in a serious trouble.
All right, we're going to leave it there. Thank you very much for your insight. Takuji Okubo, thanks very much.